Welcome back to the Daily Journal. So we're going to be going over my my Nasdaq trade from the London session. Wasn't a great session, but I managed to bring it back in New York later in the day. So we'll do that video next. But for now, this was my bias going into the day. I saw the same drawn liquidity as I had the day before. Right, these previous weekly equal highs, and this previous day relatively equal high to the previous week highs. So the fact that we hadn't closed below that new week opening gap, right? We respected it. Yes, the wicks did the damage, but it just moved straight into that daily order block. In addition to the fact that YM had swept the lows. So going into the session, wasn't in the best mindsets, had a terrible sleep, and yeah, it wasn't my best performance, as we will soon see. So yeah, we'll just remove this. There was that SMT with YM, right? So technically speaking, the previous day low, right, on Nasdaq was taken out. Right, these lows were taken out. So going into the session, of course, we had come out of this 1 hour order block, and so I was looking for continuation. Also going into the day with that in mind, right? Since we had swept those lows, we had respected the new week opening gap, bounced at this daily order block. This is one of my favorite models, and it's simply because I've learned from this many times before, where you get this massive sell-off, everyone's expecting continuation to the downside, everyone's going short. And I bet a lot of people got burnt yesterday looking for shorts on this level, overcommitting because they really think it's going to go lower. That's not the case though. When you get these moves, this is just that fake move, right? That Judah swing, and this often gets inverted, and we should see these highs get taken out. We got CPI later today, so you could see that move take us straight into these highs. Right, so I was looking for the midpoint of this to get respected. At least in the first session. So we still had room to run. So I'm just going to remove this for now. So going into the session, this was the trade idea. Looking for this continuation to these highs, which once we get down to the 5 minutes, it's the Asia highs, right? So that's 11:20 p.m. Eastern time, and look at those clean equal highs. That's exactly what you want to see. Okay, so I'm going to just remove this, keep it clean. Right, so there's the 2 a.m. That's what I should have arrived for. Had a terrible sleep the night before, got to the charts too early, didn't have a clean read. Not because of the model, but because my mental state wasn't the best, right? I wasn't as regulated as I should have been. So you'll see the mistake I made in a moment. But nonetheless, goes to the charts, was looking for that's 1 hour, that's 1 a.m. 1 hour candle to be the reversal candle, and I wanted to trade the continuation to the upside. So we'd expect these lows to get swept, which is what we got going into the session. As that candle opens, it drops straight down to sweep liquidity. All right, so now we're forming the wick. So we want to see it close above this level, above the opening price. And we've also got our change in the state of delivery at that same level, which is really nice to see. Okay, so once we got to close above, price expanded. This is when I'd got to the charts around this time. I typically come for the 145 macro. So once we got this expansion, this is where I got ahead of myself, and my mistake was jumping down to the 1 minute, thinking, let's just get this immediate expansion. And it was such a silly mistake, given the fact that if the 2 a.m. candle is now opening, you have to wait for that wick to form. And so jumping down to the 1 minute was just, that's a rookie move. But these days happen, it's all right, so you don't have to beat yourself up about it. So yeah, there was our sweep, there was a change in the state of delivery. And you see how messy it is in the 1 minute, especially in this Asian top session or between Asia and London. These are not ideal liquidity conditions. I mean, look how many gaps. I mean, this is NASDAQ macros. It's one of the most liquid markets there is. And this is looking pretty illiquid. Look at all these gaps, right? But still, algorithmic logic remains. You've got all these relatively cool lows for low resistance liquidity, and you've got these even on the 1 minute, so look how clean that is. So on the 5 minute, we had equal highs. There was no need to go down to the 1 minute whatsoever. I was just getting ahead of myself. And so the trade idea was, okay, we had opened, we had made this wick, also our thoughts. And once we had moved out of that, this fair value gap, I used this as a projected low, and I got into the trade there. That was the projected low, and I was looking for a quick 2R into this gap. And as you will see, right, so once we had closed above that level over there, this second one, I then used this low down there, and that's what happens. And there's the trade, right? So yeah, and you can see there's me following the process, but then I jump down to the 1 minute, and look at that over there. What is that? I'd even put it in on the chart. That is a 5 minute gap. And yeah, so now look how clean it is. If I just been more patient, so the grades, the 5 minutes is dropping down to rebalance this inefficiency. I just have to be patient and wait for the 2 AM candle to print to take out the Asia highs. And this whole move is actually the Judah swing, because as we'll see later on, price gets rejected, the 2 AM actually then drops lower as a reversal, and it comes to take out these lows, which are the Asia lows. Which, if my idea was higher for the day and to invert that for our fair value gap, you'd expect at the very least session sell-side liquidity to get swept. So yeah, basically I just got caught up in the Judah swing. Correct bias, but I was better off just sitting and waiting for the 2 AM, the 3 AM, and then actually seeing the real move of the London session, not catching the in-between. It's a valid model, don't get me wrong, but this isn't an A+ because it's not the right time. And you know, I'm used to trading New York, where in those kind of high liquidity conditions, you know, I could maybe get away with that 1 minute. Probably not, to be honest, because the volatility would have come down to that 5 minutes. I just would have been more respectful, right? So anyway, but let's just play this out to see how it actually played out, because once we had dropped into this, all you need to do then is wait for the continuation, right? This was a reversal, wait for the continuation, and this gets really high probability now because we get SMT with ES. We also got an YM there, so we'll stick with that. Right, so now we got a new point for the change in the delivery, which is also the opening level of the 2-hour candle. And it shouldn't even be the 2-hour candle that the 2 AM 4-hour candle that I should be concerning myself with, right? Since I'm using the 1 hour and 5 minutes model, shouldn't even be concerned with that. So there it is. That was the trade. That's what I mean, it's exactly the same. You know, we dropped into a fair value gap, changed state of delivery, trade the continuation. But I did that on the wrong time frame, and that was my mistake. Just getting impatient. It really is that simple. The model was I was following the correct model, the correct sequence of events and so on, but just on the wrong time frame, which is just classic impatience. It happens, right? That's one of my shadows that I've been, I've always had to work on. And the shadow never really goes away until you fully accept it. And yeah, I'm still fairly early in my trading career, so can't beat myself about it. These things do happen. And this is what I was saying. Look, it was better just to sit and wait for the 2 a.m. candle to form its wick. Because once this closes, I mean, there's your change in state of delivery, the 5 minutes. So there's that wick. So if I change this to the 4 hour, you've now swept not once but twice the previous 4 hour candle's highs. And it's Asia high. You get to change the state of delivery at the London Open. Look at that. You come test that. Incredible. So if I'd just been more patient, this was the actual move. But again, with that model I had in mind of us inverting the 4 hour fair value gap, I got a little too ahead of myself. So you can use the 0.5 of that. And then you get your standard deviation hours. And just look how much cleaner this price action is than this. This is just chop. Right, to be fair, this was fairly clean. I've got no excuse there. But I'm just saying compared to, and this is also clean, but Asia typically, there's more liquidity in the other session. So there is your 2 to 2.5 standard deviation. And this is that Asia low that you should get taken out. In fact, when you use the 15 minutes, as you usually should on the 4 hour, that would be your change in the state of delivery. So once we get a close above that, below that level, right, that's when you can enter. And you can drop down, but this is a there it is. All right, so that's, looking to trade London, that's the move. And now I was settling for, look, there's nothing wrong with this. Again, nothing wrong with that. It's just the wrong time. So again, let's just play this out. Right, there it is. And you see, once you get that change in state of delivery, it just prints. So yeah, the rest is history. It just dropped down lower. Great, guys. So that's the daily journal for today. And I'll be back in the next video going over my New York session where I had a lot better read on price action. Cool, guys. Chat to you then. Cheers.